All right, I've seen enough. In today's video, I'm going to show you why I believe there's a 91.5% chance that Bitcoin and crypto bottom is in. And if I'm right, this means there could be massive opportunities in the market as a lot of people are being caught offside right now. A lot of people are still extremely bearish right now, and a lot of people are extremely skeptical right now. So watch my analysis, watch how I have come to this conclusion. I've built a full AI model that I'm going to run you through, and I've gotten all of the discretionary data points that I want to run you through because I do believe these data points hold the key to why I am 91.5% certain that the Bitcoin bottom is in. That's not 100%. We don't do absolutes on this channel. I want to be super analytical and give you some of the headwinds as well so you can make your own investment and trading decisions. And then towards the end of the video, I'm going to show you my exact positioning based on my thesis where I think I can allocate capital to get the best returns. So if that sounds good, make sure you smash the like button to show the algorithm that you like this video, and let's get straight into things here. So looking at Bitcoin, you can see that we have pivoted off the lows, making a higher low, and for the first time in a while, we're also making a higher high. Now, I still think it's important to recognize that the 95 to 96K zone is still a significant area of resistance until proven otherwise on Bitcoin. But this is the first time that we are probably going to come up and test this zone, which shows that the market has more of a bullish bias than it basically has over the last 1 to 2 months. Bitcoin is finally ranging after some time of just downtrending. This in itself, price action alone, can paint the picture. But to paint the full picture, I want to run you through the variables, the exact signals that I've gotten to come up with that 91.5% figure, because these are the signals that I'm using to assert my trading thesis. Signal number one was Bitcoin's reaction to bad news. Over the last couple of days, we've seen some really negative headlines. For example, Japan's 10-year government bond yield surging. This highlights that there are potential issues with the Japanese yen carry trade, which has spooked markets in the past. We saw China's central bank vowing to crack down on virtual currency. This headline came out on November 29th. We saw the Tether FUD the other day, and also there's been a ton of MicroStrategy FUD, with at one point MicroStrategy down $10 billion in terms of market cap below its principal Bitcoin holdings. However, despite all of these negative headlines, you have Bitcoin flushing out all of the late shorters with over $400 million wiped over the last 24 hours and price continuing to go higher and higher. And this is important, and this is why it's signal one, because typically in markets, news isn't that important. Headlines are headlines. In fact, when Bitcoin was peaking, when it was around 120 to 150K, you can see that there were tons of positive headlines. You can see on October 8th, there was a photo with Eric Trump and President Trump talking about his Bitcoin prediction. This got 1.2 million views in 24 hours. You could see the Saylor headlines were ramping up, with Saylor now holding 420,000 Bitcoin. We saw Tom Lee being interviewed across all the major platforms like CNBC, getting over 3.1 million views. We saw the largest inflows in a single day into BlackRock's ETFs. All of these really strong headlines which got people excited. We also saw lots of talk on the debasement trade, which resulted in a 10% move in 24 hours to new all-time high. This all happened between October 6th and October 10th. The good news couldn't stop flowing. But what happened on October 10th? Well, it ended up marking a local high for Bitcoin. You can see it on the chart right here. So we know that good news doesn't necessarily mean that price has to go up. In fact, it's often a lagging indicator. Good news often ends up topping markets. Now, it's not the news itself that matters, it's the market reaction to news. We saw all these bullish headlines, but Bitcoin price went lower. That signals that there's no fresh demand and that sellers are outpacing buyers. Now, you can flip this logic from the highs to what is happening currently. We've seen all of these negative headlines, but price is actually moving upwards. So this shows you that there are more willing buyers than willing sellers. And the market shrugging off the news is actually a signal that it is ready to go up. It is one of the signals as to why I believe the market has bottomed. Remember, it's not a 100% signal, and I'll show you the AI model shortly. It's just one of the signals that I believe is important. The news itself doesn't matter in crypto for any token. What matters is the market's reaction to news. Just remember that. All right, let's go into signal 2 out of 4. Then we'll go through the AI model, and then I'll get into my positioning. Signal number 2 is the fact that FUD often marks local bottoms. I actually want to take a look right now to past examples of similar headlines and see what happened in the market. But just before we get into that, I want to pick the 5 winners from yesterday's video. Remember, if you comment Noti Gang on the video and have notifications turned on, you're a chance to win $100, and we're doing this every day. So let's give Aussie Brucho $100. Let's give Hippie Yippie $100, and let's scroll down so we make sure it's fair no matter when you comment. Let's give Trader G.I. Joe's $100. Let's give Frank $100, and let's scroll down again and give Nick $100. I think that was 5. Actually, you know what? Let's give a couple extra people $100. Let's give Samuel another $100. My team's going to be like, Miles, why are you spending so much money? And let's give, who else can we give it to? Balin Crypto $100. So if you want a chance to win $100 in the next video, all you need to do on this video is comment Noti Gang or a derivative of such, and make sure you have notifications turned on. If you did win in today's video, what you need to do is go to the description of today's video and email this email proof that you are logged into the account that you commented from. Giveaways.marsdeutcher@protonmail.com. It'll be in the description, and we'll ask you for a few extra steps to verify that you are the real person. Yesterday, we did have people trying to dupe the system. That's why we verify that you are real. Just make sure to use that exact email, because I don't want you emailing any scammer. So good luck, and shout out to the Noti Gang who watch these videos every day, because we are doing daily uploads at the moment just before US Open. So going back to signal number 2, FUD actually often ends up marking local bottoms in market. We know that Bank of Japan, FUD, or headlines in previous years have resulted in rallies. We saw this in 2022, 2023, we saw it briefly in 2024, and we're getting the headlines happening again. That's one of them. We also saw that China banning crypto has marked local bottoms 2017, 2019, 2021, 2023, and again, potentially this year. We've also seen that Tether FUD, because that started to crop up again with Arthur Hayes saying some stuff about Tether recently, has marked local bottoms. We saw it in 2018, 2019, 2022, 2023, 2024, and potentially again this year. These are the same headlines that we've seen recycling again and again and again. And finally, the MicroStrategy concerns. We saw this mark a local bottom in 2021, 2022, 2023, 2025, although technically the market dropped after before going higher. So maybe that's the one outlier here. And then 2025 again as well in November. So once again, in isolation, it doesn't make me 100% convinced the bottom's in, but it is another factor alongside the first signal, the market reaction to these headlines, that the market could have put in a bottom and is leaning into positive territory. But there are 2 more signals, very, very important signals to paint the full picture here. Then I'll give you the caveats or some of the potential headwinds for the market that make it not a 100% certainty. Signal number 3 are flows flipping from negative to positive. So remember, in markets, this goes for specific altcoins, this goes for Bitcoin, this goes for a market like equities overall. The really important thing is that there are positive flows. There is a strong narrative, and there is liquidity net flowing in rather than flowing out of that asset class. So for a while, we saw a few factors work against us. For example, the OG whales were selling. Well, this was one of the variables that was keeping us underwater. You can now see, and I don't think we're fully out of the woods, but the skew from selling has started to uptick now, making a higher high on the output value bands chart, which tracks Bitcoin whales between 1,000 and 10K Bitcoin. You can see that they are accumulating again after this skewed aggressively negative after spiking on November 20th. So there was a lot of OG whales selling. We're seeing evidence, and it's also clear on the order books, but also on the on-chain data flow, that these whales have stopped selling or have slowed down their selling. So that's one of the things that was working against us that is now starting to reverse. Also, the ETFs, they were working against us. You can see we had outflows on the 14th, 17th. These are heavy outflows as well, almost $1 billion on the 20th of November. We had multiple consecutive red days, which is now flipping to multiple consecutive black days or green days, if you are looking at a candlestick chart. So you can see that we are now starting to tick into the positive inflows. And you can also see on the chart, this is starting to flatline and actually now tick up in terms of the total cumulative flow in US dollars for Bitcoin spot ETF inflows. So that is something that was negative. We saw ETF outflows. Now value buys are stepping in, and we're starting to see it tick positive again, which is a signal of demand. Even the treasury companies, this has also started to stabilize. Okay, they're not buying a lot, but they weren't offloading aggressively. Admittedly, the treasury narrative is about the fact for potential liquidations or potential forced selling, but this actually isn't the case. So what has happened is there hasn't been a strong narrative to buy off the back of treasuries. That has limited the market, but we are now seeing things starting to stabilize if you look at Bitcoin holdings. They're not going down, they're simply stabilizing. So this is another thing, albeit that's been a consistent trend over the past few weeks. And then there's the final signal, which is very important, because this is a big driver of markets before we get into the caveats, and that is the liquidity environment shifting. We know that liquidity has been tight from a local perspective. Obviously, M2 and global liquidity has been going up from a macro perspective, multi-month or multi-year perspective, but from a multi-week point of view, things have been negative. We saw the US government shutting down. That caused a lot of strain on the financial system. And we know that Bitcoin trades, especially in the shorter term, more on market liquidity and not a big index like M2. So Bitcoin moves with marginal liquidity indicators like the reverse repo, like the Treasury General account, like Fed balance sheet flows, like global QT or QE, like the liquidity index, and like futures funding leverage conditions. A lot of these have been working against Bitcoin. The reverse repo and the general account with the government shut down were working against Bitcoin. Fed balance sheet flows in a state of quantitative tightening until just 2 days ago, now that they aren't tightening anymore, was also working against Bitcoin. The US liquidity index, although it was working for Bitcoin for a long time, we saw a flight to the dollar and the dollar started spiking, which meant that even though M2 was drifting upwards, it wasn't impacting Bitcoin in real terms because M2 is denominated in dollars and people were going into dollars and not risk assets. So Bitcoin trades on market liquidity and not M2, and that is one of the reasons why in the shorter term, Bitcoin was stalling. But there is some evidence that that is starting to shift now. We can see that global financial conditions are now starting to ease again. In fact, from a macro point of view, they're now reaching the easiest level since 2021. This stuff does impact markets, but it takes time to set in and time for liquidity to start flowing into risk assets. And obviously the short-term factors were limiting that being the case. We're also now starting to see some short-term liquidity measures, which make it very hard to fight momentum for the bears. We have Trump saying he will keep stocks at record highs. By the way, they're extremely incentivized to keep pumping markets. Jack Mallers, the Bitcoin guy, had a video here that he posted. He said, buy every dip. The US can't afford falling asset prices. Stocks are the retirement system and the tax base. If the market drops, the system breaks. QT is over. Rate cuts QE, not yet, but one day. Deregulation, stimulus, and housing relief are next. No matter what they say, remember they have to print. And that's true. The US really has one MO at the moment, and that is to print. And you can't see that going anywhere anytime soon. So you'd have to assume, from a macro point of view, there should be a liquidity increase. But in the shorter term, we are still seeing, obviously, Fed cutting interest rates. Global AI infrastructure is still spending at around $1 trillion a year, and that's not slowing down because they need to at least try and fight in the AI race versus China. Obviously, Fed QT is ending. US deficit spending is now above 6% of US GDP. There are record corporate buybacks coming next year. Trump is saying he will completely cut income taxes, which is obviously relief for discretionary spending. We don't know whether this will go through, but this is the narrative driving the market at the moment. So it does seem like the regime we saw from a few weeks ago is now starting to shift with bullish liquidity signals into next year. There is a caveat, but this is point number 4, the fact that the liquidity environment is now shifting. And this has put short-term pressure on Bitcoin. So that is another reason why I believe the bottom is probably in, from a probabilistic point of view, for Bitcoin and crypto. But there are some caveats. Let's go into some of the caveats because I think this is important. I think the one caveat, and this is pretty much the main thing that gives you a little bit of uncertainty, are US stock market valuations. This is just the honest reality of the situation. US stock market valuations have hit their highest level in modern history. Not even periods before the 1930s Great Depression or the 2000 dot-com bubble saw such expensive US stocks on a PE basis. The markets are up only. Now, obviously, they are front-running some of these positive liquidity measures, and Bitcoin should theoretically start to do that as well. However, if there was ever an earnings shock from Nvidia, if there was ever an incredibly high capex like we saw with the recent Meta earnings, if we saw that starting to happen with other Mag 7 companies, it could put pressure on equities. And because I think next year is going to be a volatile year, as I said in my show 2 days ago, I think you will have periods where the market pulls back aggressively and causes some leverage flushouts in the markets. But I think overall, the trajectory will remain up and to the right. But by far, the biggest caveat and the biggest reason not just to go all into risk assets is because equity valuations are quite high. And if you do see any sort of shock, any sort of like even mini black swan or any sort of pressure on valuations, you could see a bit of a flush out. And that is something to be very, very aware of because we can't say that the Bitcoin bottom is 100% in, even though, obviously a lot of the evidence I've suggested today is very strong. When you do have valuations this high, obviously if equities drop, Bitcoin would drop. But overall, I still think the macro picture is pointing upwards. So that is the caveat. Here's the AI model. I came up with all of this in a discretionary manner. Then I put it into AI and got this to quantify a number because, probabilities are always super, subjective. So I wanted to give it a number. I would roughly agree. You could even put this number slightly lower. But I think 91.5% is around fair. And you can see pillar 1, as we discussed, was the reaction regime. So, bad news, bullish reaction. This got 32 out of 32 score. FUD saturation and typical FUD marking local bottoms in the past. That is a very, very strong score as well, and it's something that we've seen. And then flows flipping. This is strong, but not all in. So this is where, there's a slight caveat because, of course, the DATs represent a slight risk. You never know what's going to happen with them as long as there's DATs. There is risk, so that's why I can't be 100%. And then, of course, with the liquidity injection that we are seeing, yes, there is an inflection point right now where we are starting to see an uptick coming from a downtick. However, we do know that valuations for equities are slightly stretched, so you can't give it a 100% weighting. So the reaction's great. The FUD is actually great. The flows are strong, but you still have to be cautious because of DATs, and the liquidity inflection is good, but obviously you have the current situation with equities. So assuming you agree, and even if you don't think it's 91%, if you think it's 51% or 60% or 70%, then you would still be looking at opportunities, right? As long as you're above 50, you'd be looking at opportunities. So let's now go into my plan on how to capitalize on these opportunities. So Bitcoin is obviously an asset that I've been accumulating throughout the downtrend. That is the place to start. You guys also know, of course, not financial advice. None of these videos are. I've also been accumulating some MicroStrategy. So those are things that I've spoken about on the show. But I want to get more into altcoins now because there are a lot of dislocations that present when you have such a beaten down market. And when things start to uptick, remember, things won't be in a straight line. Bottom in, and I just want to also make this clear, bottom in doesn't mean straight back up to all-time highs. Bottom in means 81 should be protected, and you can come up here, you can flush down, you can even have one more flush out and then come up. Or you could come up, break, and then have another flush out down. But I'm saying that there's a strong probability that this is now the uptrend for the market to recover. There was all this FUD that we shrugged off. There was all this negativity, all this selling from OG whales, and all this unwinding of the DAT trade that has just taken place, and now the market is reacting well. If we're still chopping here, I'd say we're going lower, but you have to just take the market objectively as a trader. And if PA was really bad, I would take that as a signal that we hadn't bottomed yet. So obviously, price action matters and the reaction to news matters. And the reason I'm making this video today, and not a few days ago, is because not all the pillars were checked off. I said that there was a good chance that we bottomed a few days ago and we'd come up to 96, but the evidence is now even stronger now because of some of the criteria which are now ticked off that weren't before. So obviously, the stronger price reacts, the higher probability you're going to have. But because the market's been so beat down, from a longer term point of view, there are a lot of dislocations in the market. I mean, even yesterday, I saw yield basis incredibly beat down at a major support on the daily, and you can also see it was on a major support on the 8 hour as well. They have incredibly strong fundamentals. In fact, it's one of the DeFi projects I'm most bullish on in this space. So live on the AMA, I opened a perp trade. It's up 53%. It was up 70% at one point. And I posted beforehand in the Discord that I was also adding some spot. That is a dislocation. I think this can move higher, by the way, into weekly open at 47 and potentially higher. I think multi-month, this is a really good trade, and this is a nice invalidation line in the sand level at 40 cents if you want it to be a little bit more risk off and have an invalidation. But this is the kind of dislocation that I thought was a good opportunity yesterday, and I decided to trade. The thing is, in a market like this, where things are still choppy, but if you do think that the bottom is in, what you're doing is you're just on the lookout for opportunities. You don't need to ape all in. Like, I got some nice Bitcoin exposure, so I feel comfortable. And what I'm looking now is to pick off opportunistic opportunities. The headwinds are completely clear. It doesn't mean we'll go up all at once. There are still elements of the economy which are shaky. You're never going to get that green signal. But what you can do is just keep open for opportunity. And a lot of people are closing themselves for business because they feel like they've been burnt by the market, because they sell their portfolios down, because they don't trust the market anymore. But what are you going to start doing? Trusting the market when Bitcoin's 100K again, 110K again, approaching all-time highs again. What you have to do is be opportunistic when there are these micro shifts. Even if it's just a few weeks of a micro shift, there are trading opportunities to do really well during that period. So yield basis was a dislocation that I posted in my Discord. Another one that I'll share on the show today, because I think this is ongoing and I have been accumulating a little bit, is Zcash. So yes, I would be looking to maybe offload a little bit into resistance of 425, but it does seem like a reversion to the mean, and this can be identified through the money noodle on the H12 because it was following it all the way on the way up. It could actually happen here, and we could get a retest of the weekly open, monthly open as well, and this could result in a decent trade already from this level. So keep your eye on this because it's a strong narrative. I think it'll come back at some point. These are dislocations that have been created over the past few weeks of negativity in the market. The other thing I'd be focusing on are high time frame setups to clear inval. Because if you're not certain about the current state of the market, then you want to make sure you have invalidations on most of your trades. So the best altcoin setups are simply those where you have invalidation. Typically, in the market, in an environment like this, I always want some sort of recourse on my trading in case it goes against me. And it's hard to do from a fundamental perspective when things are shaky, but at least by having a technicals, you have a level that you can pivot off. For example, yield basis, if we start closing below, I know I can cut my losses for a relatively small loss if we start closing below. It's the same as Solana right now. I've been accumulating some Solana. If it breaks below and make a lower low below 120, it's fine. I'll just cut. I'll let it play out. I'll let it make price discovery to the downside. And then if I need to re-enter, I'll re-enter. Like Sui's another good example of this. When it broke down, I started flipping bearish on Sui because I didn't like the price action when it started to break down from its range low. Now it could potentially be reclaiming. So pivot off the high time frame levels, look for a flip on the daily in Sui, and maybe this could be a trade where it can reclaim and squeeze back to the upside. Having key high time frame levels on alts makes it a lot easier to trade, but until then, it's going to be a sell the pump event. The other thing that's bullish for markets that I thought was worth mentioning today is the fact that Vanguard is now opening the door to crypto ETFs. Now, they're not going to be going down the risk curve and, putting a bunch of low cap altcoins in ETFs, but what they will be focusing on in the beginning are the large cap alts. So XRP, HBAR, G-Link. You can also see that Canary funds are also filing for an American-made crypto ETF, which is going to have HBAR, AVAX, Bitcoin, Link, LTC, Sol, XLM, XRP. These two variables can prop up the large caps in the market. And I think that's important for the overall health of the crypto market. So very interested to see what the flows are here. But what we do know is that these major alts will likely be the most prominent ones in the Vanguard ETF. And actually, there's an index that you can use to get exposure to this without having to buy every single one manually. It's called the CoinMarketCap 20 Index. It's created by Reserve. And you can see that since inception in 2024, it's been tracking the market nicely. I mean, it started at 100 and at one point it was at 260, so a 2.6x. It's good because you have the top 20 and it automatically rebalances and you don't need to pick specific altcoins. If you're just bullish on crypto in general and you don't feel like you can pick or outperform the market and you just want a lazy way to invest, you can just buy the index, get exposure to Bitcoin with a 68% weighting, so it is the majority, get some exposure to Ethereum, get some exposure to the majors without knowing which one gets the most flows. You might not know if it's going to be between Chainlink or HBAR or XRP, but you can just buy into an index which gives you overall exposure, and it's going to be weighted mostly in Bitcoin. So if you're bullish on Bitcoin, it makes sense. So this is something I'm looking at right now because I don't know if I can necessarily time all the trades for these. Of course, I'm looking, to reclaim on Sui. I think there's an interesting setup on Link, but I don't know which one is going to get the strongest ETF flows, but I know there are going to be flows. So just buying into the index gives you the ability to do this. For example, Sui's up 23% today. You wouldn't have been able to time that. So just through owning an index, it gives you some flexibility there. So CoinMarketCap 20, definitely check this out. Obviously, CoinMarketCap was acquired by Binance, so they're a major player and is powered by Reserve. We actually also have other indexes as well. So of course, if you think there is a sector dislocation, for example, you think AI as a whole is undervalued, but you don't feel like you can pick specific tokens there, or liquid staking overall is undervalued, but you don't feel like you can pick specific tokens there. There are actually indexes where you can play around with it. Personally, I'm focusing mostly on this index, CoinMarketCap 20, but of course there are other things you can take a look at as well. This is another bit of alpha for you. Dislocations don't just mean specific altcoins that have dislocated prices or a lagged reaction versus news or catalyst versus price. There's also categories. Like a lot of categories are absolutely beaten down. Like AI agents, they're going to come back again in some way, shape, or form in the future. These are things that can squeeze quite quickly. Robotics, meme coins at some point could pump, but I feel like that meta for now is a little bit played out. Real world assets, of course, is a massive one. So privacy, of course, is a huge narrative. Like you want to be looking at where are potential flows going to come from? What narratives are going to receive the most attention flow? And that should reflect on price. So taking like a sector by sector approach and then breaking down that sector in your research, I think is the best way to approach trying to spot dislocations in the market. And of course, if there's like a high time frame level to pivot off, that's the cherry on the cake. It's going to make the risk management of that trade so much easier. So let me know what you thought of this video and this model. Do you agree that the crypto bottom is in? I think there are some really strong signs right now. Of course, we'll remain adaptive. Of course, I'll keep doing these uploads to keep you updated with the market. Remember, we're uploading daily at the moment. So if you comment Noti Gang and make sure you have notifications turned on, you're in the running to win $100. But of course, you'll also get updated first when these videos go live. And sometimes they're going to be really time sensitive and important. Like I'm literally uploading this 20 minutes after I film here. So I think you guys are in for a treat with these daily uploads because we're putting a lot of effort into them. My team spends hours researching, and I do as well, but we love it. And it's good to see the market waking up a bit. Once again, this video is not a signal to ape into everything. It's just giving you the evidence, and you can make your own assessment over what probability you think the market has bottomed. And hopefully some of the frameworks around altcoins can also help you out in terms of how you can think about the market. Generally speaking, I want to go up the risk curve. So start with Bitcoin, start safer, with major altcoins, credible altcoins at key high time frame levels, and then move into some of the riskier stuff later. Of course, all Discord members are going to get the early scoop on any alpha that I do decide to pick up off the back of this market momentum. So I will see you in the next video. Hopefully you have a lovely rest of your day. See you later, guys. Peace out.